We are in the middle of an economic downturn. There is so much uncertainty about the future, and people are looking for solutions and strategies to not only build wealth, but to achieve financial independence. So, in this video, we're going to look at one of the most influential personal finance books of all time, Rich Dad, Poor Dad by Robert Kiyosaki. This book inspired millions of people around the world to take control of their financial futures and build long-term wealth through smart investments and calculated risk-taking. We'll be diving into some of the key lessons from the book, discussing how it can be applied to today's economic climate. I read this book well over a decade ago, and the Money GPS as it stands today would likely not exist if it wasn't for this book and the way I read it, and then started to go down further and further. I read multiple Kiyosaki books, then I looked into others, and I just kept going. Based on the recommendations I would see online, I would just go further and further into all of this knowledge. So it really helped me to get to where I am today and actually building different assets, the asset classes, learning about passive income, learning about all these different subjects. It really all started here. So I want to talk about a few things from this today, and I've broken that up into different segments. The importance of financial education. So Rich Dad, Poor Dad emphasizes the value of financial education and the need to learn about money management, investing, building wealth. In today's fast-changing economic landscape, it's more important than ever to stay informed and up to date on the latest financial trends and strategies. So just an example here, you could take online courses on personal finance. You could go to investing workshops, whether that's in person or online, and you could provide that valuable insight that you need. It could provide that to you into the world of finance to help individuals make informed decisions about their money. For a lot of people, they're going to YouTube, and unfortunately, most of it is worthless garbage because the individuals create based on the algorithm at its core, and then they work out a script around that. Instead, what we should always be trying to maximize is information per minute, essentially. And the maximum amount of information per minute, the more that we get, the better it is. But that's generally not what people want. They want entertainment, they want celebrity, and they are, even within a niche like finance, they always gravitate towards that. And unfortunately, that's just what you get. And then people make really bad decisions. And that's the way it goes. So then we have to understand the difference between assets and liabilities. The book teaches readers to differentiate between assets and liabilities and focus on acquiring income generating assets such as real estate, stocks, businesses, as well as precious metals and commodities. And he, in more recent time, has been talking a lot about Bitcoin. This is especially relevant in today's lower interest rate environment that we've seen. We've had the issues of, people not knowing where to put their money. I need to get yield. So they were putting them in the bank before that would get a few percent interest. And now you're starting to see some accounts that are giving some level of yield, but people are really scrambling today to find a place to park their money during this uncertainty. Okay, big stuff. And one of the factors here is that investing in rental properties or dividend-paying stocks can generate ongoing income streams and build wealth over time. For me personally, I like the idea of e-commerce, but it all depends on you, the individual, and what you are comfortable with. Okay, the next aspect is the value of passive income. Rich Dad, Poor Dad encourages readers to build passive income streams through investments and businesses rather than relying solely on earned income from a job. Really important stuff here. And a lot of employers, what they do is they say, hey, you put your money into this 401k or retirement account, and then we will also invest, we'll match that. That is not good in my opinion, but that's what people do. This is especially important in today's economy where job security is uncertain and the gig economy is on the rise. Just as an example, you could start a small business or invest in a dividend-paying stock that could generate ongoing passive income and provide you with a cushion during a difficult time because you've got this little nest egg that actually pays you. It's not about just having something there. All right, I got $1 million there. Oh, but then the stock market crashes half. Oh, now I got 500,000. Okay, it's a whole different story. Now I can't retire. Oh, I got a family member who's sick and who needs me and I got to pay their medical bills, or I can't work anymore because I have to be the caretaker. Now we got a problem. But if you have passive income, if it's constantly coming in, well, then whole different story. The importance of taking calculated risks. So this is not for everybody, of course, but let me just say it here. The book emphasizes taking calculated risk is necessary in order to build wealth and achieve financial independence. Everything is risk to some degree. You take a risk by not doing anything. So you're always taking a risk, right? And it's not as if you're going to just go to the casino, bet it all on black. That's a big risk. Okay, there's other risk. Not taking action is a risk as well. This is especially relevant in today's economic climate. Many traditional investments are underperforming and new opportunities may be emerging. So maybe that is related to emerging markets. Maybe it's new technologies. These are the things that maybe didn't exist before, or we don't have enough foresight to understand what this is all about. AI technology for one, but for some people this is going to be, and may already have been, a big moneymaker. Challenging conventional thinking. Look, Rich Dad Poor Dad challenges many common financial beliefs and encourages readers to question the status quo when it comes to money management and investing. And whatever you think about Robert Kiyosaki, we at least have to acknowledge the fact that that's true. We can't look at the typical just dollar cost average and you're going to be A-okay. I mean, anybody who says that, you shouldn't be listening to that. I mean, come on. Or how about for $1,000, you can follow all my trades. Are these the people that you want to be listening to? Do you have any respect for these people? A lot of people do. I see their channels getting bigger and bigger. This is the particularly important situation for today's rapidly changing landscape. Traditional rules may no longer apply. The book encourages readers to view debt as a tool for building wealth rather than a burden to be avoided at all costs. That's a touchy subject. And to be specific there, he's not saying, for instance, put no money down on home and then go all crazy. No, not at all. He never says that. In fact, I would say he's more risk adverse, but he's saying put a reasonable amount down and then use the leverage and make sure you get the right interest rate and make sure it's in the right area, make sure it's stable and there's low vacancies and all these different things. Because we don't want to get screwed over by this, and we don't want to take too much risk. That's ultimately what he says. But if we don't get into an asset, we take zero risk in that sense, that's risky in itself because we're constantly being eaten away from underneath by inflation. So just sitting on our hands is not a good thing. You got to do something. Maybe that's a business on the side you're bringing money in. Maybe that's assets, more traditional assets you're investing in, whatever the case may be. Rich Dad Poor Dad offers a unique perspective on money management, wealth building. Let's be honest, it's one of the biggest books of all time on the subject. We got to have our financial education. This is essential. And we're not going to get it from the mainstream sources. We know that. I've got the majority of mine comes from the books that I've read. I don't watch YouTube videos. If I didn't research for the Money GPS, then I would watch YouTube videos. But because I'm already doing the research, I feel like I'm completely well informed up to the levels that I need to be. So basically, you just got to get your base foundation and then learn the tasks or spend time on the tasks that bring you closer to your goals. I think that's the real message for today, is that we've got to get one step closer to our goals. How do we get there? Well, we've got these little steps along the way. What are we trying to attain? Is it maximum appreciation? Is it paying down our debt? Is it getting out of debt, really? If we're, just, killed by debt, essentially, many people are just suffering from it. And then, of course, we've got the other circumstances for people who just want to preserve their wealth. They've got enough, I'm good. I just want to, stay here, just keep up with inflation, and that's it. Well, it all depends on you. So these are the things I'm going to talk about all the time, each and every day. This is a little bit of a different video, and I hope you do appreciate it. I'm going to bring you the financial education that you need to know. No fluff, none of the nonsense. I hope you will hit that like button, and I'll see you tomorrow. Take care.